what is not deductible, things like that. I think we have quite a few people in already. So what we're going to do is I'm going to kick off the webinar, and in between, we also have Rose and Tay in the background who will let people in. If there's any questions from your end, guys, please feel free to put it in the chat box, and we're going to do our best to answer them as we go along. Now, just a little bit about Inspire. So far to date, we have helped save clients over 37 million in tax. So, and we are continue counting more. If you are a new client or someone who has never attended Inspire webinar before and would like to get to know us a bit more, talk to us about your business, please feel free to book an initial chat with one of our accountants. Rose and Tay, one of them, is going to post the link in the chat box shortly. So yeah, please feel free to book it in. In the reference, just please put in that you attended the webinar today so that we know where you're coming from. A little bit more about if you don't know, we have Ben Walker, the founder of Inspire, has published few books. One of them is what we call It's All Sorted, which is basically a business owner's 9-step guide to master your tax and achieve peace of mind. Now, there is a link here on the page and on the screen, and Rose and Tay are also going to post this link in the chat box as well if you do want to order that book for yourself to read through. Now, a little bit about myself to start off with. Like I said, my name is Sakshi, and I am one of the partners here at Inspire. I've been in the accounting industry for over almost 10 years now, but I've been with Inspire since 2018. And one of the reasons why I joined Inspire was just the passion and the drive that Ben had and replicated it to all of us about the clients and creating legacy and also that personal connection we have with our clients. Recently, just under 2 weeks ago, I did get married to my amazing partner, now husband. I'm still getting used to calling him my husband, Dinesh. And that's the middle photo there is from our wedding day. What I'm going to do is I'm going to pass the mic to Austin now.
Thanks, Sakshi. So as Sakshi kindly introduced me already, my name's Austin. I'm one of the managers here at Inspire. I've been with Inspire for coming up to 2.5, almost 3 years now, actually. And yeah, the reason that kind of Inspire drew me toward it was just the real client-first focus that Inspire has. Previous firms that I was at, I really enjoyed the accounting work that I was doing, but I really just wanted to, get in front of as many clients as I can. And Inspire, really has that focus on, ensuring or putting the clients first. So in the time that I've been here, the team that I've worked in, we'd help save our clients almost $4 million in tax, which is an incredible figure looking back at that. And little fun fact, I recently just went on a big hiking trip in South America earlier this year, which was intense. It was the first time hiking at altitude, which I'm not sure if anyone has done before, but I definitely was not prepared for it, or as prepared for it as I thought I would be. Cool. Awesome. So to give you a bit of an agenda of what we'll run through today, as Sakshi mentioned, we're looking at fringe benefits tax and with a focus on Christmas parties being towards the pointy end of the year. So the first part of the webinar is going to be a little bit content heavy. It's a bit technical. So we will be running through the details of fringe benefits tax, or FBT, as you'll hear us refer to it as. Talk a little bit about why it exists, where it applies, and what it means for you and your business, essentially, and also why we want to, where we can, avoid it. We'll then move on to talking about some of the exemptions that can be applied to FBT and what the conditions are to meet them. Specifically, relevant to this time of year is looking at how things such as wine or a carton of beer can be made tax deductible in your business. Following this, I'll throw it back to Sakshi and she'll take us through some practical examples of essentially the theory that we'll be chatting about to tie that all together. So if in the first part it's not making a whole lot of sense, hopefully by the end, once Sakshi runs through those examples, you'll have a better idea of how this applies to your business. And as Sakshi mentioned, if you do have any questions or anything that pops up as we run through the webinar, please feel free to pop that in the chat and we'll address those either as we go or at the end. Cool. So starting us off and starting at the base level of the theory is we want to understand what a fringe benefit is. So I'll read off the slides a little bit here because it explains it quite well. So a fringe benefit is essentially a payment to an employee, but in a different form of salary and wages. So essentially, it's an employee receiving a non-cash benefit uh, other than, yeah, salary and wages. So very common things that we see are, for example, allowing an employee to use a work car for private purposes, giving an employee a discounted loan, so essentially a loan on non-commercial terms. Also, paying an employee's gym membership, providing entertainment. This is one topic that we'll speak about a bit today. Providing entertainment such as free tickets to a concert or theme park tickets or something like that. Reimbursing an expense incurred by an employee that is non-deductible. So the example given here is school fees. And also, under some salary sacrifice arrangements, fringe benefits tax may apply as well. So these are just some high-level examples, essentially, of where fringe benefits tax can apply. So what fringe benefit tax means, if there aren't any exempt fringe benefits, you end up paying fringe benefits tax on it, which is equivalent to paying 47% on the expense before you give that benefit to the employee. So if you're providing a fringe benefit, you're effectively paying the highest tax rate, the highest marginal tax rate, which sounds pretty hefty because it is. And if we kind of, I guess, peel it back a little bit, what the ATO is trying to combat here is having businesses avoiding tax by giving bonuses in a way other than cash, which would be taxed in the employee's name. So to give a bit of an example of this, let's say you wanted to reward a high-performing employee, and instead of paying them a cash bonus, which they would be taxed on, you decide to give them a Ferrari. Just a subtle hint if Ben's still in here as to, Christmas is coming up for us. So before the FB2 rules came into play, you could argue that this bonus was for an employee, therefore incurred in producing taxable income. So as a business, you could claim a deduction for it. From the employee's perspective, if they're receiving a car, they can't be taxed on that. Essentially, it's not going to show up in their tax return. So that's where the ATO is trying to essentially combat this is, when we're giving non-cash benefits, there has to be some kind of taxing point. So that's a bit of an exaggerated loophole, but shows the essence of why FBT exists. So using that example again, FBT essentially says, okay, if you give that Ferrari to your employee as a bonus, you can still do that. However, as a business, you're going to have to pay 47% tax on the taxable value of this bonus. So if you did want to do something like that and give your employee a Ferrari, for example, even if it's not an employee, if it's yourself as a director or an associate in your business group, you're effectively paying 47% tax. So in that case, you're probably better off paying a cash bonus essentially and having that employee or yourself purchase it themselves from a tax perspective at least. So in a way, FBT disincentivizes excessive use of non-cash benefits for employees and business owners by hitting you with the highest tax rate. And yeah, that's essentially the essence of why it exists. So you can kind of get the idea of why the ATO is doing it. But yeah, whether you agree with it or not is another question, I guess. Cool. Okay, so sorry. Perfect. Thanks, actually. So diving into a bit more of a specific FPT matter that's relevant right now, uh, let's have a chat about is a Christmas party entertainment and or a fringe benefit? So just reading off the slide here, a Christmas party is considered entertainment in many cases and in many cases subject to fringe benefits tax. FBT is an additional tax paid by employers for some benefits, such as entertainment that they provide to their team, as I've kind of just explained now. So, one point I want to kind of pick out of this slide, first of all, is what is entertainment? This is kind of a whole conversation and a whole topic on its own. But in essence, we're talking about food or some kind of food or drinks or an event or something like that, where you're providing an employee or associate of an employee or clients as well with something of benefit to them, essentially. So if we think about food and drink, it's going to be something that's more than mere sustenance, essentially. Generally, outside of work hours, is going to be considered entertainment. Uh, just to kind of draw a bit of a line there, if you're talking about, providing training for your staff at work and you cater that training, and it's within work hours, within your premises, that's an example of where that food and drinks provided there could be a deductible expense rather than classified as entertainment. So where FBT is paid, in most cases, you can also receive a tax deduction for the cost of that benefit. Now, I just want to flag here, while that might sound attractive, being able to claim a tax deduction when FBT is paid for those entertainment costs. After all is said and done, remember FBT is a big tax, 47%. So you're not going to end up better off, essentially, than if you were to, for example, not claim it as a tax deduction and not pay FBT on it. And I'll go through this a bit in the next slide here. Shows a bit of a spectrum, I guess, of what it costs you, what $100 after tax money at a restaurant costs you in profit before tax. So this spectrum here just kind of shows, the impact at these different tax rates. So looking at the first point here, not spending money at all. Obviously, that's not going to cost you any profit before tax. If the expense is tax deductible, then it's going to cost you $100 in profit before tax because it is a tax deductible expense. So that example, what might fall into that there is, let's say it was catering from a restaurant that you got for staff training in your office. It's a tax deductible expense. It's only going to cost you $100 in before tax money to provide that. Now, this next one here where it's FBT exempt, but no tax deduction. This is where this is where we want most of our expenses to fall into, essentially. The reason being, we want to make sure that the benefits that we're providing, so for example, for Christmas party or for gifts or things like that, we want to make sure that they don't classify for FBT, but because they are inherently in nature entertainment expenses, in most cases, we won't be able to claim a tax deduction for it. So the grossed up amount that would cost us in profit before tax, using a tax rate of 32% there, is $147. Now, using that example from before where I mentioned we can pay FBT and still claim the deduction for that, you can see the difference here is essentially about $41 that we're better off by not paying FBT but claiming no tax deduction compared to paying that FBT and claiming the tax deduction. So yeah, a bit of an example, I guess, to just illustrate what that looks like. So next, I just want to take us through what the FBT exemptions are. So in that middle column there, when we were talking about that $147, it was mentioned that we want to make sure that those expenses are FBT exempt. So there's a couple of ways that expenses can be FBT exempt, specifically when we're looking at Christmas parties, wine, beers, those kinds of things. So the first exemption is the exempt property benefit. So costs such as food and drink associated with Christmas parties are exempt from FBT if they are provided on a working day on your business premises and are consumed by current employees. So the property benefit exemption is only available for employees. We'll go into that a little bit in a second, not associates, so family and friends of the employees, and also not clients as well. So specifically only employees on your business premises. And just a note here, even though there's no FBT, as mentioned, it's not a tax deductible expense. So let's say we spent $100 doing this using that Spectrum example before. This would be where it would cost us $147 pre-tax to be able to supply this benefit. Cool. So the next exemption that we frequently see is the minor and infrequent benefit. So this is the provision of a Christmas party to an employee may be a minor benefit and exempt if the cost of the party is less than $300 per employee or to an associate of the employee, so a spouse or partner or plus one. And certain conditions are met. So the threshold of less than $300, this is important to discern, applies to each benefit provided, not the total value of all associated benefits. So what that's saying is, let's say you have a Christmas party and it's $180 per person. Essentially, we could apply the minor and infrequent benefit to that. In that case, there's not going to be any FBT applicable to that. But also, as mentioned, it's still an entertainment expense. So there won't be a tax deductible expense. So it would fall into that $147 per $100 spend section of that spectrum again. So, oh, sorry, Sakshi, if we could just
sorry.
go back one sec. That's all good. Yes, also just to clarify as well, where it says here, the threshold applies to each benefit provided. So what this means is per employee, you don't have a quota of $300 per year. For example, let's just say, the Christmas party, the benefit you gave to each employee was $100 per head spend, let's say. If at another point in the year, they have private use on a motor vehicle or something like that, each benefit is its own benefit in its own right. So if we can apply this $300 minor and infrequent benefits to each of those expenses, assuming it is one under $300 and is infrequent, then there's not going to be any FBT applicable to that. Cool. So one important thing to associate as well with Christmas parties, because obviously depending on what industry you're in, you may have Christmas parties with your staff and get some clients in as well to kind of celebrate the year as it was. So it's important to discern what the impact is on the difference of treatment between employees and clients. So if you choose to invite clients to your Christmas party, the rules do change a bit. In all cases, regardless of the cost of the party and entertaining clients, the client part of that cost will not be subject to FBT. Fringe benefits tax inherently is addressing non-cash benefits supplied to your employees. So clients don't fall under that category. Therefore, there's no fringe benefits tax that applies to them. However, it still is entertainment. So that cost is still not going to be deductible in your business. And importantly as well, where the cost is not deductible, GST credits can't be claimed as well. So in this example here, you can go out and spend $400 a head on treating a couple of your clients to a lunch. You won't have to pay FBT on that. Unfortunately, you won't be able to claim that as a deduction, and you won't be able to claim GST credits on that as well.
Amazing. Thanks, Austin. And I think like Austin has covered a lot of examples in terms of FBT, what's deductible, what's not deductible, um, you know, per head. What we do need to remember is that $300 one. Now, what we're going to do is just summarize everything in one snapshot. And I'm going to try to do my best, summarizing and giving a few different examples. Now, like we said, this time of the year, Christmas party is one of the main things. Like, we get a lot of our clients emailing us asking, hey, I'm planning to do this for my team. Can I claim it? I'm planning to invite or send wines or like fruit baskets to my clients. What's the rules around it? So, what we want to focus on is just give you some of the most frequent examples we have received to date from our clients to show you, like, just to differentiate between the things. So, to start off with, if the Christmas party is held on your business premises, what happens then? So, if, say, for example, you're a small marketing firm and you decide to have a Christmas party on the business premises on a working day before Christmas, and you as a business provide food, beer, and wine, and that Christmas party is only attended by your current employees only, then there's no FBT implications as it is an exempt property benefit. What if your current employees and their partners plus one attend that, and the cost of that per person is $180? Uh, in that scenario, for employees, there are no FBT implications as it is an exempt property benefit, and the minor benefit exemption can also apply. For associates, there are no FBT implications as well. However, if the cost per head, say, for example, adds up to more than $300, in this example, it's $365. Then for employees, there's no FBT implications. For associates, a taxable fringe benefit will arise for the value equal to or more than $300. And if you have invited your clients to this party as well, that's on site, there's no FBT payable and no income tax deduction. So, what a rule of thumb we need to remember is $300 or less, essentially. Now, obviously, a lot of Christmas parties happen off-site, not on business premises. And from time to time, companies decides to hold, go to a nice restaurant or make a day of it, things like that. So what happens when this happens? So if your Christmas party is off-site and only your current employees are attending it, and the cost of this is, for example, less than $300 per head, there are no FBT implications as the minor benefit exemption applies. Now, again, if your employees and they plus one attend and the cost is still less than $300 or less, there will be no FBT implications as minor benefit exemption applies. However, if current employees, they plus ones attend and your clients attend, but the cost is now more than $300, say, for example, it's $365, then for employees, a taxable fringe benefit will arise. For associates, they plus ones, a taxable fringe benefit will happen. For clients, there is no FBT payable, and the cost of providing that entertainment is not income tax deductible. So the key here is for your clients, you can spend as much as you want. Basically, doesn't matter if it's less than 300 or over, there will be no FBT. Reminder, it's still classified as entertainment and it will be no tax deduction. For employees and their plus ones, less than $300 is the key there. Now, This is just re-summarizing what we just the examples I gave before, but I'll just run through some more examples. Say, for example, I did go through the first one. A Christmas party is held on a working day at the business premises and only employees attend. There's no FBT payable and there is an exempt benefit. There is also no tax deduction and you cannot claim GST on that either. If, for example, a Christmas party is held at a local restaurant and only employees attend, and the cost of the business and drinks is less than 300 per head, in this scenario, it's $100. There is no FBT payable, and the cost, as it's less than $300. However, it's also no tax deduction and no GST credit. Last, the example at the bottom, a Christmas party is held at an expensive restaurant and in the city, and it's a 7-course meal. That would be absolutely amazing. Only employees attend. However, the cost of this is, including the wine, is $350 per head. What will happen here is FBT is going to be payable in respect to the employees um, for the benefit. Sorry, my screen just went blank. FBT will be payable for anything over $300. The cost is an allowable deduction and GST credits may be claimed. Now, remember, that's basically because it's over $300. Now, what we have seen from time to time is Christmas gifts. Like, as you know, time to time we do want to thank our colleagues, our clients for Christmas gifts. Now, it is a little bit tricky. For example, for tax purposes, a gift may also be considered entertainment. So if it's an entertainment expense such as movie tickets, concert tickets, airline tickets, theater tickets, it may be subject to FBT and might not be deductible for tax purposes. However, if you send, for example, chocolates, a gift voucher, pen, or a Christmas hamper to your clients, they may not satisfy the entertainment criteria and may not be subject to FBT and will most likely be tax deductible. So it just depends on what kind of gift you are sending. Now, what we also need to consider is the amount you're spending, which is including GST. A lot of times what happens is you gift something, if you gift an item of entertainment to your employees, that is $300, including GST, remember that, or more, it is subject to FBT. Tax deductible and GST credits may be claimed. If the cost of the gift is less than $300, including GST, it is not subject to FBT as we can apply the minor benefit exemption. However, in this case, you're not entitled to a tax deduction, nor can you claim GST credits. So again, just like that Christmas party, the same scenario happened is there. And what Austin went through of more times, it is better not to claim it as a deduction because you're saving more money there rather than paying the FBT tax. When clients are gifted products such as entertainment, they are exempt from FBT, not tax deductible, and GST credits are not deductible as well. So we can't claim GST credits on your pass. Some of the examples of these entertainments includes, like I mentioned before, theme parks, sports, leisure activities, dinner, drinks, movie concerts, cruise, things like that. Now, if you're not sure what is deductible and not, what I would recommend is just reaching out to your accountant just to have a brief summary of it. ATO's website is also a great example. There's a lot of examples that are posted on ATO website as well now, especially this time of the year where they are posting what is entertainment and what's not. Gifts that are not entertainment provided to employees that cost $300, including GST or more, a reminder they are subject to FBT, whereas gifts that are less than $300, including GST, are not subject to FBT. Now, for clients, gifts that are not entertainment are exempt from FBT and are tax deductible, and GST credits may be claimed regardless of spend. So this is a bit of a snapshot of what is deductible. The key there is $300. In all our slides, what we have mentioned is the $300. That is the limit there. Now, what I would recommend is if you're still not sure what is deductible, we are going to send the slides, the recording of this, so you can go back and listen to it. If we haven't covered that particular example, please feel free to reach out to us so we can assist you further. Now, we have created a simple guide as well here. If you scan this QR link, that will give you more examples to show you what is deductible and what is not, if it's FBT exempt or not, and if you can claim GST credits or not. So I would highly recommend scanning that QR code, and Rose and Tay will post that link as well in the chat box. Now, again, as we started, basically that's the end of our session. Like I mentioned at the start, if you are not an existing client of Inspire, you are a business owner and you're looking and you want to chat with an accountant, with one of us, please use that link to book in a strategy call. Now, just a reminder, we are a referral only firm. However, as if you have attended this webinar today, in the referral, you can put through attended the Christmas FBT webinar, and what our team will do is book your call in with one of our amazing accountants. Now, that's pretty much it. I can't see on my end if any Q&A questions were posted. Rose, can you help us there?
Yeah, we've got a few over here. So we have Melody asking a question: is a fuel card under the FBT rule?
I can answer that one. So the answer is it kind of depends. Sorry, it's not to be able to give you a straight answer there, Melody, but it depends on what the fuel card is being used for. So, for example, if the fuel card's being supplied to an employee for their business motor vehicle, let's say they're a builder or a tradesperson, and they're using that fuel essentially to carry out their work. In that case, it would be deductible. And FBT would not apply, because there is another exemption that we haven't covered today because it doesn't fully relate to Christmas parties, called the otherwise deductible exemption. So if there's a benefit that you're providing an employee that is going to be deductible in their personal tax return if they were to pay that expense personally, then if the business pays it for them, then the business can claim that expense itself. So yeah, essentially, if the fuel card is being used for 100% business use, then FBT would not apply. If there is a private use portion to it, then FBT may apply in that situation, unless it falls under one of the other exemptions.
Cool. We've got another question from Shelley. So what happens if the Xmas party is after normal hours and off-site?
Yeah, so with that one, like I mentioned before, if it's off-site, we just need to remember the $300 per head cost. Again, if it's for employees and they're plus ones and the cost per head is less than $300, no FBT, but again, remember, not a tax deduction either, and no GST credits claimed either. And if it's more than $300, then FBT rules will apply.
Cool. I think this one's pretty similar. What happens when we don't have an office or a business premise to hold the party? I run the business from home and our employees work out on the road, so can't have it at our business premise. That one's from Melody again.
Yeah. So again, you will be conducting the party off-site then, since there's no business premises. Under $300 spent, no FBT, but also not a deduction, and no GST credits claimable.
Awesome. That's all that we have for questions at the moment.
Amazing. Thank you so much, guys, for your time today. What we're going to do is we are going to send the recording out to you shortly. And what we will do, if you do have any further questions and you're an existing client of Inspire, just please reach out to your account manager and they can assist you further. If you are not an existing client, please feel free to book a strategy call with us and, we can see what we can do to assist you. Thank you so much.
Amazing. Thanks, everyone. Thanks for coming. And Merry
Thank
Christmas
you.
as well. Feels weird saying that only in November, but Merry Christmas.
Merry Christmas.